Hey guys, welcome to another video brought to you by Total Control Traders. So, how's everyone feeling in this market? Today was key day. And I'll cover why today was key day, because now the trend has been confirmed reversed. Okay, let's get into it without any delay. Now, there is a message that I am going to share. In this market, you have to decide whether if you want to be playing bear, whether if you still want to hold through, waiting for that bounce, or if you're just going to be patient and sitting on the sideline with cash. Now, the market over since November has been nothing but buying the dip. Okay, every single dip here again, this dip again, it's all been recovered with a V shape and complete recovery into higher highs. However, now we are seeing something different. This was a hope of V shape. We did not go into new highs. It went down and basically went down lower, retested trend line. Then there was another hope of V shape, but rejected from the key zone. So market has now been reversed. We are trading under the day 88. We are a little bit extended from a day 88, but this could only be the beginning, or this could be the only beginning, right? So the market has been basically bearish, partly due to NAS, majority due to NAS. So let's reverse the video from now on. For the meantime, we're gonna look at NAS first as opposed to SPX first going forward until a change has been witnessed. Okay, all right, where does this go? No, yeah, you could do that. Or all right, so NAS, we saw a bounce on Monday, and then a slight bounce. What is this? Thursday, so this morning before another pullback. So on the NAS has been the problem. Okay, if you were to look at this drop, the first drop, actually I didn't draw that correctly. That would be right here. Excuse me. So on the first drop, you can see the bounce came up to roughly the 0.5. Key zone lining up with 0.5 before the rejection to a new lower low. Then from there, we bounced again, and you would draw it from here to the lower, or you can draw it from here to here. And you can see that we failed to break over the GP, and now we're seeing another leg down. Now on the daily is a lot clearer. On the daily, as I was mentioning in our trading community yesterday and today, that what we could very well be seeing based on the bounce on Monday. Oh yeah, sorry. Friday, Monday were the days I was mentioning that this could very well be just the lower high on the daily. So watch the daily. What we're seeing here is essentially an A, B, now seeing a C pattern. I don't believe this is the bottom. I don't believe this is a C yet. This is where I'm looking at the GP from this whole move since November. Yeah, the GP from this whole move since November. You run a fib from November 2nd low or November 1st low to the high of 13909.8, and you will see that the GP almost lines up with this key zone back here. And on NAS, it's a lot worse than SPX. We have already lost not only the pandemic trend line, we basically back tested it, and now we also lost the 2003 trend line. The first bounce we saw was from the 2003 trend line, which we can see from before. Resistance, resistance, support, multiple supports back here. The flash pullback also found support there, and then we saw another support here before making new lows. So NAS is clearly in a bear trend. We have now lost that key trend line from 2003. Let me just make sure here. I believe it was 2003. Yep, 2003. So that has been lost now. On the monthly, essentially, it could still be a monthly bull flag, but with the way that we're pulling back right now and the huge upper wicks, let's just clear the chart so we can take a look. The big upper wicks and the way that we're pulling back, it is a little bit less likely for a monthly bull flag now, especially considering how we're only 4 days into March and the volume of the bear volume is already half of February's bull volume. So with that being said, this could go into a long-term consolidation, as mentioned before, that once this pullback starts, we could be looking at a long-term consolidation. How long that's going to be is going to depend, first of all, reaction on this monthly 8, what that looks like. And then from there, we could see, imagine the first one would be, actually, let's do this. I imagine the first reaction would be something like this month we'll touch it. It's going to be hard to draw. And then we bounce a little bit before making a lower low. And then back test, back test, and then higher low, and then go back up. So this could be a because we're looking at a monthly consolidation, we could be looking at a long term into July before the market reverses again. So the question is, do you want to be playing bear in this environment? The bear would be favorable. Looking at the VIX, the VIX finally popped with some profitability potential today, depending on what you're playing, whether it's VIX, VXX, or UVXY. I finally saw some potential for profitability on UVXY today. Didn't play it, but there is some potential showing up now. And the reason why it wasn't too profitable before is, if you look at the hourly chart on this sell-off, it's a bit different. So let's go into the sell-off of the previous sell-offs. All right. So you look at the hourly on previous sell-off, when it tops out, it goes sell-off, bounce from a trend line, whichever trend line that is. What is that trend line? I don't know why this one's here. All right, let's delete this one. All right, yeah. So sell off, bounce, and then big sell off. All right. You look at any other ones, it's going to be similar. Just pick any kind of sell offs. You see huge sell off right away. It's hard for bulls to even react. This time, it's a little bit different. This time, look at the sell-off. Slow, steady, and then sideways, bear flag right here. Further, and then a very tiny cool off, followed by a little bit more action, but there is still bull action here. Lots of lower wicks, followed by another lower high, and then slow grind on that RD8, and then we cooled it off again and saw some decent bounce. Now the RD8 comes back, and this one is very clear. You can see RD8 reject, RD8 reject, RD8 reject, another one reject, another one reject. That is extremely different. That is a very controlled sell-off. Okay, now the problem with controlled sell-off is it could last a very long time. Aside from that, also there is going to be a lack of bounce opportunities. So on this, we got extended. We formed the bull divergence on this particular candle, and it met the trend line, the 2003 trend line. It met the 2003 trend line, and we saw a decent bounce from here. So this was a given that, you know, some sort of reaction had to happen. Then we cooled the chart off, decent bounce. You can still see bear actions. Look at this huge bear volume. So from here, then we saw the RD8 again, reject, reject, huge sell off, then come back, reject again, even after this huge bull volume, and then reject again. And now there's that other bottom, another bull divergence. You can see from this lower low to this higher low, and the RSIs higher here and lower back here. So that's a bull divergence. And we saw another correction. This was a very nice V-shape backwards recovery, but the red flag was rejection from GP yet again. We got into the near that overbought condition with rejection on GP. Then from there, RD8 comes back, reject, slowly going up. This was a bigger sell-off, and actually there was a bear divergence back here too. So RSIs got higher, even though the prices didn't. The prices were lower. So that's a bear divergence. And now we're seeing lower lows. RD8 again serving as rejection. Rejected right before market closed, and right now we are potentially rejecting again. So market is clearly in bearish trend, especially in NAS. There is a sector rotation. Let's look at why we say there is a sector rotation. FAS is a banking ETF, 3 times bull leverage. So obviously there's overnight, there's going to be some decay on it, but you look at all the time. How long has the market been in bearish? I can't remember the exact date. February 16th. So now it's been 13 trading days in bearish action. And if we look at fast, 13 trading days backwards, 13, that is exactly when banking started popping. Okay, right at this bull flag confirmation, and now we are potentially forming another bull flag on FAS. So there is a rotation going on, going out from the big techs into more conservative stocks. Do understand that, especially if you're looking for a bounce place. There is not a whole lot of bounce plays out there, especially if you're looking at big techs. Now let's look at SPX. We're going to be spending majority of the time on the market today versus individual tickers because of the key trend reversal. So why do I say today is key? Today, what happened was we lost that pandemic trend line for the first time. All right, from the pandemic low to the bounce of October. Oh yeah, I got rid of the wedge, but this is the beginning of the bounce, beginning of this glorious bull move that the market has provided us. Okay, that's where we found the bounce, and then the pullback of end of January, we found the bounce there on February 1st again, and now we are losing it for the first time. This trend line likely no longer going to come back in play for some time. So chart, you can see a lot clearer now. Remember, if you see, whether it's my chart or your own charts, if you see messy chart, as DHA called it, spider web chart, it is likely that you're going to see choppy action. All right. Now this chart is a lot clearer with potential upper trend line, lower trend line that we have been finding support on. So 1, 2, 3, 4, 5, 6, 7, 8, 9. So this is going to be a key trend line to look at. We could very well grind down from here. We are getting a little bit extended from the daily, the 4-hour 8, but you can see that there is a potential that we just form a bear flag like we did back here. Wait for that 8 to catch up before the next leg down. Because on the daily, we're not too far extended yet. So tomorrow, if we see gap down open into the trend line, into this key price action of 307 or 3706.3, that would be some bounce opportunities coming up right here. All right. Now the key trend change, not only because of the loss of pandemic, but also because we have lost now the GP from this most recent move. For any trend to change, the GP generally generally want to see a loss of GP from the most recent move. And on this most recent pullback, we have now lost the GP. Today, going into tomorrow, we'll tell whether if we're going to close under. I'm thinking if we come down here, open somewhere around down here, there's going to be some glorious bounce making us close over it. So there is still a chance for bulls, but the chances are a lot slimmer now because we are now trading under the pandemic trend line. Okay. Ultimately, let's look at the monthly. Yeah, this is there's a lot of trend lines going on here. So monthly, essentially on SPX, monthly is still a monthly bull flag, and it looks a lot better than NAS. Now let's go back to take a look at what generally happened before this. You could call, let's see, 12 months, a whole year worth of run. This is 14 months. What happens after? 1, 2, 3. 3 months of sideways consolidation action met that monthly 8 before the next leg up. Next leg up is not so much. So let's see if this works for Elliott's wave. 1, 2, 3, 4, 5. Okay, so on the monthly, what you could be looking at after this huge pullback in 2008, something to be aware and potentially be careful of. 3 is generally the longest to the biggest leg. 4, we could be looking at a 5 now. So on the monthly is actually a little bit scary in the sense that, there's a chance that we see extended leg 5. We're going to have to see what the reaction looks like at the monthly 8. So better to be conservative or even plain bear in this environment. But as you can see from back here, 14 months, you're going to have to give it minimum 3 months. This is an even longer run. Let's do it from here. Top out is basically here, 27 months of run. Then 1, 2, 3, 4, 5, 6, 7, 8, 9. Wow, this okay, yeah. This one's a bit different. This one's a pullback. Bull flag. Not really a bull flag. So the first possible scenario, depending on what the reaction looks like on the monthly 8, would be right here. Gonna watch for 3 months of potential sideways action before the next leg up. Then from there, we're gonna have to watch what the volume looks like. If you see something similar to this with clear decreasing bull volume, you know what to do. GTFO. All right. So yeah, overall, chart still looks decent, but now it is trend reverse confirmed on both SPX, NAS, and likely Dow as well. Don't usually pay too much attention to Dow, but you can see a clear A, B, now looking for a C on Dow as well. On Dow, the chart is a lot clearer. Don't keep too much trend lines on it. Just recent ones. Dow, we haven't lost the pandemic trend line yet. Actually, what does it look like? So depending on how you draw it, you could say that we have lost it already. I'm not sure why this one. This is how often I look at Dow charts. The last time I drew a trend line was back here. Doesn't mean that you shouldn't look at it. Dow provides some. Oh yeah, even the fib was drawn to here only. Dow provides some clarity on, I wouldn't say the overall market, but on what the bigger names are doing. So I like to use Dow as sort of an indicator on bigger picture. So on Dow, we are seeing lower wicks forming, but let's zoom in. We are trading under that pandemic trend line as well. And the reason why I draw it this way, again, rule goes back to, or the way I like to draw it is always use the most recent and then see if it works for the one before that. So we can see support, support, support. So it makes sense back here. It makes sense that the trend line is over here. Okay, you could use the low of this, but then you will miss this one. Then it doesn't really become a trend line. Now there's a 3 touches. It is a trend line. From here, if you run the GP, Dow is very strong still. Not even near that 0.382 yet. If we do come back to the 0.382, there's lots of choppiness back here. So there's a lot of key prices. You can see there's a key support resistance here, a key support resistance here, somewhat of a support resistance around here as well. But yeah, overall, this will be most ideal entry. Previous all-time high lining up with the 0.5. Similar story on SPX. Previous all-time high lining up with the 0.5. And that's why there's a big arrow pointing towards that way. That would be the most ideal entry for bulls. Remember, it may take a few months. So in between, there will be bounce opportunities. Whether if you play the bounce or whether if you wait for the bounce and play the bears, that's up to you. I will potentially be looking at playing the bears going forward. But let's see what the bounce looks like tomorrow first. Anticipating a bounce because we are getting a little bit extended from the daily 8. And with indexes, you generally don't see too much of an extension before a correction. The other way. All right, so that's it for the general markets. The cause of today's dip was majority due to Powell's announcement of 10-year yield 10.5%, rates going up. So that'll affect a lot of things, inflation. He said that it won't push it past the 2%, or was it 2.5% they use this guideline, 2%. But that'll affect basically everyone. There's mortgages that are going to be affected. There's going to be bank interests that are going to be affected. So that was a big announcement. Big cause for today's pullback, which actually makes sense. If you look at the 10-year over 2-year bond rate, we hit that all-time high, triple wick rejection, huge pullback, and now we are potentially looking for that C as well. So bond have, as mentioned in the previous video, we have ran in the quarters of the time nearly as much as the last time that the 10-year over 2-year bond yield ran. Okay, so this is a little bit concerning, and now we are seeing that concern playing out via controlled sell-off. From here, would anticipate further downside. 1, 2, 3, 1-to-1 extension is right around that previous support resistance area of 7.361. So keep your eyes on this. VIX, big pop today. Yet another rejection from the key zone. You can see multiple rejections from back here. Got into it, reject, got into it, reject, another one, and now potentially another one. And this could be, a sign that for market bounce tomorrow, just gives me more confidence. If tomorrow we were to see open up, go somewhere there, I would anticipate a pullback on VIX. This has been one of the shortest break before the next pop on VIX that we have seen in some time. This is only 18 trading days, and then you're seeing a lot more frequent to 5 trading days versus any of these previous ones. Even just by the gap alone, you can tell that's a lot longer. This one, even this one's 19 trading days. So yeah, market volatility increasing frequent as well. All right, saw a pop just on February 25th, and now we're seeing a pop again in beginning of March. Increasing volatility, which is anticipated towards the apex of this long-term wedge. Would we be making higher highs? There's a chance that we could break this 37.51 on VIX. 41.16 I imagine would be a major resistance. You can see resistance from back here as well, and somewhat of a support from here as well. Not sure if this wick is real, and then resistance from back here too. So this 41.16 will be key to break, which I don't imagine that they're gonna make it easy. It's gonna be somewhere around there, but there is a chance that we could spike up to break the previous high of 37.51. Now my favorite indicator, US dollar. What are we looking at? Big spike on US dollar today. No inverse head and shoulders. So the sign that was given to us is head and shoulders with a neckline, break of the neckline, lack of follow through, huge lower wick, holding that key support, that key zone, broke under it once, but got bought up 3 days in a row. That was a bearish signal for the market. That was a warning signal for the market. From there, now we're seeing a second big day of spike. The 88 remains the guide on US dollars. From here, the next resistance, key resistance to break that we have not went back to visit yet, is at 92.127. You can see support before breaking down, and yeah, that's the next one. Are we already trading up? We already made new highs from this head and shoulder pattern. So overall, US dollar is very bullish. We are getting a little bit extended from the 88. Anticipating something like this to form. There's only been one bull flag confirmation so far. Would anticipate, especially given the market conditions, would anticipate further sideways action and then another bull flag confirmation. So remember, if you have US dollars, US cash is a position that is looking bullish to make you money. All right, that's it for the market. 30 minutes. right on the dot. Right. So from here, let's get into the hottest tickers, and we will try to speed through as many tickers as possible. Now, the reason why we're not going to cover the tickers too far into details, unless there's something interesting, is majority of the tickers are going to be moving with the market as seen recently, because of now market being in correction phase, consolidation phase. Overall, majority tickers would be acting similar, except that a little bit different this time is market is in controlled sell-off environment, so there is still a chance that to look for those relative strength on tickers to play bullish. If you are eternal bull, that's what you want to be looking for. You want to be looking for the relative strength to play versus the market, because when the market reverses or bounces, those have a higher chance, much higher chance of providing great returns. All right, first one, Bitcoin. Rejection from this potential trend line that I was looking at. Then from here, I think it's monthly. Yeah, monthly bull flag likely to form. Again, it's monthly, so it's going to take a long time for this to form. Okay. Next one, Tesla. So Kathy Wood's been buying Tesla, but let's look at this monthly chart. I'm going to try to clean up the charts, on the monthly. We are coming up to the monthly 8 relatively fast. So this is likely not going to be a bull flag setup, but let's watch for the reaction. I'm anticipating a bounce from the monthly 8 around that 569, 570 zone. And let's look at the closer time frames. Tesla is, why is it doing this again? Hey, they removed the last one. That is so interesting. Hey, John, you remember that? There was a huge upper wick somewhere with one of these candles back here, and now it's gone, and then now there's this big upper wick today. That is so weird. All right, anyways, so not a real wick. Go to the closer time frame, even the 8 hours, you will see the true daily candle using 8 hours, just as a FYI. 8 hours, easier to see. Actually, let's use the 8 hours. So right now, we are just about losing this key trend line from previous high to support. Not even that key, to be honest. There's only 2 touches on it. Not sure why this one's here. All right. So we just lost that trend line. From here, what I'm looking at is this quad confluence. It's coming to it a lot faster than ideal. So let's see what tomorrow brings. If we open up lower right into this GP of this whole move since November, right around that 580, 570, 580 zone, would be looking for a bounce play. GP, key zone, not that key, but you do see some rejections, some supports. So this one is not. Yeah, so this one, okay, so yeah, we did see some bounces here, so that will keep there. Not really key here. So this doesn't really provide much of a guidance, but there is a GP here, and there is potentially a lower trend line of this long-term channel that we have been seeing since 2020. You see it's just channel bounce from the lower trend line. So there's 1 touch, 2 touches. Is that 2 or 3? 2 touches. Almost touched. Yeah, so we could potentially be looking at the 3rd touch of this trend line. Would be picking up first entry, even if it's just bounce play. Let's see what the reaction to that is. We will be extended from the daily 8, and then we're going to watch for reaction at the daily 8. As we saw from previously, bear flag, daily 8, drop down. Bear flag, daily, note, didn't touch the daily 8, and just started dropping quickly. Then we bounced, bear flag. No, not really. Well, depends how you look at it. So this could be a very long-term bear flag. Daily 8, further drop. So let's see if we open up around that 580 zone. Top watch for me tomorrow, going into Monday. All right, next, PLTR. Relative strength in PLTR today. This could be, can it be? Nah. Relative strength, I was gonna say if it's gonna be volume climax, but I don't think it is. It's just a pop in volume. So bulls are coming in to defend. You zoom into the hourly to see what exactly is going on. Bulls really want to hold that trend line today. So, and every time we came to the trend line, you know, there's a wick down under. We bought it up, wick upper hand. So there is still some sellers. Huge lower wicks right around that key zone. Okay. And then the end of the day, we started running again. So let's see what tomorrow brings. Can't really see what the after hours price look like, but PLTR on top watch. We're right at that 88. Tomorrow we want to see the confirmation of reversal. Tomorrow is key for PLTR. This is my top position now, PLTR. Let's see that reversal. Kathy Wood's been buying as well, for those of you that are interested in following her. Next, DKNG. 1-to-1 extension, now huge rejection and follow through, trading under the 88 already, and back testing this key zone, seeing a little bit bounce from there, increasing their bear volume. All right, bear divergence, slight bear divergence. Somehow I can't get it. There we go. Slight bear divergence from here, would anticipate further downside. We are just getting under that 88, increasing bear volume. So let's see what tomorrow brings. Would anticipate further downside. And congrats for those that played DKNG and took profits along with me on that 1-to-1 extension target. It was an amazing payday. Next, FSR. Similar idea, 1-to-1 extension target, huge upper wick. There is still a lack of bear volume. So there's a chance, you know, the chart looks similar, but the volume looks a lot different. And there's no daily divergence. Interesting. FSR, relative strength possibility. There is none right now, but there is a possibility. And we are bouncing from the GP of this whole move. That is very interesting. Let's watch FSR tomorrow. I haven't looked at it in some time, but give me 1 sec, guys. Let me make a note of this tomorrow. Oh, wow. It has been a while since I did my list. Yeah, I'm gonna have to do my watch list again. All right. FSR looking decent. I like the setup. Next, zoom. And we're likely to remove the zoom from hottest ticker going forward until it becomes interesting again. But I just don't know which one to move it back or move back onto the hot tickers, except for maybe GME. But yeah, that could be a possibility. Maybe we'll cover GME on, we already are covering it on a daily basis anyways. So huge profit taking, rejection. No, not really profit taking. So rejection, because key zone, reject, straight into the other key zone. Now we're finding a little bit of support here. And these trend lines don't seem to be acting as any support or resistance at all. So let's remove that. Never got the gap fill. I imagine we eventually will. I mean, stocks are made to go up over time, so this gap will eventually be filled, but just not right now. When a lot of people are looking one way, charts tend to like to do the other direction, you know, just to make it hard for you. So decreasing bear volume is getting a little bit interesting, but in this type of environment, be patient. You'd rather be late, don't be early. Not extended on the 88 yet, potential reversal sign, but this is a choppy chart, you know, down, up, down, potential reversal candle. Let's see what tomorrow brings. Not very interested in it. All right, next, that's it for the hottest tickers. Next are the hot tickers. Oh, Amazon trading under 3 grand. Trading under 3 grand again for the first time since what is this? November. Jeez. Is there a support here? Yeah, so slight rejection here. Support. So 29.55 is a clear price to be watching out for. We already lost the key zone, seeing a little bit of reaction on that 29.55. We actually lost it slightly, 29.45. Chart is still weak. All right, NVDA, I think is weak as well. Yep, similar idea. Excuse me. Bearish chart, increasing bear volume. One more day and we might get extended from the daily 8. Wow, that's gonna be oversold on most time frames now. 4 hours, not yet. Already is oversold with no bull divergence. 30-minute is oversold with no bull divergence. 15-minute has some bull divergence, but with 4 hours and daily, there is potential for further downside, especially on increasing bear volume. Watch for a volume day like this one, then that could be a potential volume climax day on a downtrend. So then there is a balance opportunity as we get extended from the daily 8. Next, I wanted to take a look at this one. Skills. Let's do skills, ABNB. Skills, we are seeing, whoa, huge volume. Huge volume today. Midday volume pop. Midday volume pop. 10:30. Let's look at the 30-minute actually. 11 o'clock. 11 o'clock, huge bull volume pop. And we held. We're trading at over the 30-minute 8 now. Still under the already 8. There's a chance for reversal from here, guys. Watch skills. And put it, let me make a note here. Skills. Oh yeah, let's take a look at Apple. Rafaela has been really interested in Apple lately. And let's see. So, lost the GP. Trading under the weekly 8. Trading under the daily 8. On the monthly, there is a chance of bull flag still. Bear volume is not so much. There is a monthly bear divergence that's playing out. So be aware of that. It is a monthly bear divergence. Likely to take a long time to play out, especially now that we're so close to that monthly 8. I imagine we will lose that monthly 8 this month. Earnings in May. So likely a couple months of consolidation, sideways action into earnings before a potential for recovery. But yeah, chart doesn't look great on shorter or longer time frames. On the shorter time frame, we're just getting walked down basically. Already, you can see already 8 rejection, triple wick rejection. Apple, don't, even if you want to try to catch a monthly 8, Rafaela, just what I would recommend is you want to be late. It's okay to be late, especially on this kind of chart, and try to use fibs, because on a chart like Apple, it reacts very well to fibs. And we can see we already lost the GP on it. You see the last time we touched the GP, we had a decent bounce, and now we're losing it. So what you would do then is you would draw it from a lower price action. actually, let's see how this worked out. All right, so 1-to-1 extension we held. No, we broke down under. Chart is very weak. 113.80, 113.90. Key resistance support lines up with 1 to 1.618 extension target. Does it line up with monthly 8? No, it doesn't. So there's a chance that we just wick. We come down, lose the monthly 8 relatively soon. Wick from this key price, 113.8.9-ish. And then there'd be a bounce play there. There would be potentially a bounce play there. Okay, watch that price action. Let's do this. All right, so Apple, and next ABNB. I think head and shoulder is playing out. Head, shoulder. Now we're trading under the trend line. Looks great. Came to that key zone, bouncing from it. Let's see if there's follow through tomorrow. Gonna want to see some follow through tomorrow, and then the reaction around that GP. Do know that there is another GP down here, and with market consolidating, this could provide a very decent bounce tomorrow. Let's say that we open down here, right into the ideal entry, and we bounce to the day 88. That alone is a 10% bounce. Actually, even today's candle is alone it's a 7% move. This ticker moves amazing for volatility. Is that right? 13, 15%. Yeah. So watch for Airbnb tomorrow. I don't know why I don't have it on yet, but ABNB should be top watch tomorrow. All right, the other one is snow. Okay, that ended differently. So I was telling my trading community today, that no, there is potential play in snow yesterday with earnings. Last time we saw earnings, there's a decent bear action right before then, and a huge volume came in to buy it up day after, even with negative earnings of 128%. So this time's a little bit different because the negative earning is 315%, but we did see huge volume, and there was a play in it because look at this, huge bull volume came in buying it up, and then before just bleeding it out. So there was a play, just not as ideal as last time. Overall, chart looks bearish. Very bearish. Lower low, lower high, lower low, lower high, lower low, higher high, lower low, lower high. Now we're looking for a lower low, and that will be potentially the new all-time low. So not gonna be on the top watch anymore. Next, APHA. Bearish action. Breakout, fake out. Breakout, fake out. Got me. And now we are breaking down from the trend line, the wedge. Potentially. What are all these? Let's see if there's follow through tomorrow. That is key to watch. Still very interested in marijuana sector, especially given that, going to be all throughout 2021 that should be on your top watch. All right. Yeah, okay, this actually reacted well. All right, next, Baidu. No, I don't. No, Baidu doesn't interest me. QS, bearish follow through, increasing bear volume. No divergences, potential for further downside. Next, FUBO, bouncing from key zone today. Pop in bear volume with increasing bear volume. That is interesting. Now we're trading under the wedge, under closed above the previous high and support, wicking from key zone. Anticipation would be, if there's a bounce tomorrow, watch for the reaction at the 88, but would anticipate further downside from there to potentially base here, like we saw in FSR, Neo, lots of names. But yeah, over the next little while, wouldn't be interesting in FUBO. Chart looks bearish, and there is likely more bearish price action to come. Let's cover the top Wall Street bets again. All right, so remember what I said on GME last couple of videos. We are seeing a potential bull flag forming, and now today there was a very nice pop. For those of you that caught it, there was a short-term wise a wedge that's forming here. Then we saw a break of the wedge with increasing volume. This alone, let's say that you're looking at this was already increasing volume, these two. So let's say you got in, not gonna say the lows. That was a 21% move. That was a very decent move. For those of you that caught it, congrats. I was taking it easy watching Netflix today, so no FOMO. So from here, there is a chance for a GME to see continuation. Gonna have to, ideally I want to see a touch of that daily 8 first to see if there's an actual bull flag setup. But based on this daily increasing bull volume, we could just go into that gap fill of 213.07. And next, rect. Are we still giving back? Yes, we are. We're holding that 88, decreasing bear volume. Didn't close below, so there's a chance that the likely scenario is that we're gonna go back to fill the gap. There's another gap below as well. Remember, it is a pump and dump. I think Wall Street likely caused this, so let's see what happens from here. Anticipation is a little bit more give back. Would make sense to back test this trend line as well. Right, next is AMC. More bearish than GME. We are trading under the 88 on increasing bear volume. Chart doesn't look so great. Bounce, the only bounce that we got was to the 0.382, and we are already rejecting from it. Over the long term, looking a little bit more bearish. Earnings is coming up as well on March 10th. So not very interesting in this chart. Next, UWMC. Huge give back still. No gaps left behind. Bear volume seem to be decreasing. We are holding the 88. Chart could be interesting. If you're interested in chart, watch for the next couple of days price action to see if we actually hold the 88, because that would be ideal. Today's bear volume is already lower than Tuesday's bull volume. So we could be seeing a reversal from here. It is actually a little bit interesting. Let's watch for the next 2 days. If we see that curl, potential for a curl to form, right? SCR. Let's make it last but not least, score. We haven't checked on this chart for quite some time. So we are revisiting the GP. Lost this previous one. Now the key GP to hold. So depending on how you draw this, it could be over here. It's still under it. So this consolidation might take even longer. From here, let's watch tomorrow. See if we hold that GP. Not very extended from the daily 8 yet either. Based on the fib extension, we could be looking down at 1387. There's a chance for that. So if you are in this play, either be patient or be patient. Whether it's being patient waiting on the entry or being patient on cutting. Ideally, if you are in a position and you're in the red already, watch for the hold of this key area. If we lose this, next key support would be down at the 1880 area. So that's a big drop. 1830s area, big drop. All right. If you're in the red already, maybe consider cutting it. Chart is very bearish. Is it another way to draw this? Not really. Yeah, chart is very bearish right now, but there's lots of potential, just depending on how long you want to hold on for. All right, that's it for today's video. Don't forget to give a thumbs up. If you're looking to build that pot of gold and enjoy the content that we provide, please consider subscribing to our channel where we provide new videos daily. Also, check out our website at totalcontroltraders.com. We offer 7-day free trials to our chatting platform where trading ideas are shared as well as charts are reviewed live. Hope you guys stay safe and be in control. Thanks for watching. I will see you in the next video.